We managed to even surpass that 19,700 mark. Institutional activity was the only muted factor. So if you look at the buy figure from the FIs yesterday, that was really a minuscule figure. So let's see whether that becomes a trend or that manages to put on some weight as it did all of last week. So nothing alarming, so to speak, as of now. We seem to be in good shape.
You're going to stay with the trend. I mean, there is no point in trying to say, okay, I'm going to predict the trend. This is the end of the rally. There are two options here. Stay with the trend or do not participate. Don't go against the trend. I know there is this feeling that, okay, how much more markets can go higher. This is it. But markets can take their own time before the real trends play out. So don't go against the trend. Stay with the trend. Option is yours whether you want to participate or not. There are two factors which always drive a stock price: EPS and PE. EPS is a function of earnings, which frankly is not that great, where you will see incremental changes. You will not see disproportionate changes when it comes to the earnings season. Liquidity is where the change is, and liquidity is where the real acceptance is. So it's liquidity in large cap stocks, and it is FOMO in small and mid cap stocks. So that is what is leading to the market that is what is leading to the market uptick. So stay with the trend, recognize that this is a liquidity driven market, and if you missed IT, don't worry, I think it's back to banks again.
Okay, and that's something that you've been talking about. 19,700 is what we managed to conquer in yesterday's trading day. And of course, the other big factor that the markets are tracking is numbers, earnings that have been coming in. And if we were to just round up some of the key earnings of yesterday, you had HDFC Bank, which came out with its numbers, and by and large, it was in line. Profits as well came in above street expectations. You had the provisions as well, which were up just about 7%. LTI Mindtree, it was a big miss on revenues, but margins did manage to hold steady, and you also had a Tata Elxsi, and it was a weak set of numbers. So Nikunj, just going by some of those key earnings, that is also going to be a focal point.
It's a big week for numbers. You've been on the right side of HDFC Bank. Today you got IndusInd Bank. Later this week you got HUL, and then you got Reliance. But if you really have to map for the day, just for the day, I think the brokerage reaction in HDFC Bank is now going to be having an impact on the stock per se. For the first time, there seems to be a universal consensus by an HDFC Bank, and there is no consensus positioning. Very rare you see this kind of a market where a stock is cheap, everybody wants it, but the portfolios do not have over ownership of HDFC Bank. So I think HDFC Bank, the targets are, now we're talking about what, 2300, 2100. The stock is about 1600, it's between 16 and 1700. I don't remember. Between 16 and 1700.
1681, yeah.
1681. So, I mean, look at how lofty the targets are for a same stock where post-merger the targets were way below
slashed,
and they were slashed. So that's what I think this stock can do. So I think HDFC Bank will be the propeller going forward. LTI Mindtree, what can I say? Why was the rally in IT stocks last week? I refuse to accept it. The writing is there on the wall that what kind of crunch they are going through. Tata Elxsi, it was this grand mid-cap stock, and I think it has reached that mature curve also now. Today you got IndusInd Bank, which is the dark horse. They've come back. They've come back with some gusto. Hinduja, as we understand, are looking at increasing their stake. It's cheap, it has not participated. The problem with IndusInd Bank was that post the LNFS crisis, whatever they committed, they did not deliver. It's only last 3 quarters they've delivered. So once bitten, twice shy. Now markets are taking a leap of faith in IndusInd Bank. So that number, purely from a market standpoint and positioning standpoint, would be there. And he's the man. He's been saying that things have turned around. Well, he's demonstrated. Another quarter more of demonstration, the P multiple should catch up.
The other sector in focus, while of course yesterday it was the blue chips of the blue chips that actually participated and pushed the index higher. Cases in point being Reliance, SBI, and of course HDFC Bank, like we've been highlighting. Look at the auto sector, and given the recent outperformance and the kind of move that you've had in autos up until last week, while of course, Nikunj, the data points clearly continue to be the input cost pressures have eased off, the passenger vehicle sales have been very strong. In fact, across the board, you have seen new launches, better sales, all of it is looking okay. But if you just were to map the 5-year averages in terms of the valuations as opposed to the 1 year forward, Nifty Auto Index has already crossed that, and I can see barring maybe a Tata Motors, Maruti, and then Ashok Leyland to some degree, all of them have peaked out their 5-year valuations.
See, every market rotates, and I think the sector of the year so far, I think, is clearly autos.
Yeah.
If it was banks for 2022, if it was IT for 2021, it was digital in the second half of 2021, it's autos this year. Why have auto stocks got re-rated? They did not participate. They did not participate in the bull run because it took time for markets to realize that post-COVID, things will normalize and auto sales will come back, and you were not commuting and nobody was buying cars. So auto has been on this comeback trail. But whenever you're looking at a sector, you must understand the tailwind and the headwind. What is the tailwind for the auto sector? The tailwind for the auto sector is worst of the margin print is behind us. Economy is normalizing. Luxury cars are being sold more. SUV market is where all the excitement is. But the headwind now is that two-wheelers are not doing okay, and the valuations are not looking all that stretched. Now, when you say the 5-year average, let's go back to that 5-year average, please. That 5-year average for me is, in a sense, an indication of where we stand today. Now, Aisha, let's look at it. You're comparing a 5-year trend, which includes the pre-COVID time when autos were good and the COVID drop. If you're nearing a 5-year average, when the margin pressures are clearly not over, competition has intensified, the complex of the construct of the companies is changing, you would say that a lot of good news is in the price. So I will not be surprised that it could be a case of buy the rumor and sell the facts for autos in this earnings season. Everybody knows autos, everybody is bullish on autos.
Yeah.
What is the next trigger? Prices are down. Mahindra has got re-rated. Tata Motors has got re-rated. Hero Motor has got re-rated. Eicher, Maruti has got
all of
re-rated.
them.
Tell me one stock where you would say that, okay, naya kya aane wala hai. The special situation there, I think, would be CVs, because that is in an exponential cycle. So CV components, that I think will do very well. New launches may keep some of the chotu-motu companies up and down, but that's about it. I think it's an expensive sector to own now. It's not bombed out.
Yeah.
I could be completely wrong, but that's my assessment.